Namaste viewers, this is Chokkalingam Palaniappan from Prakala Wealth Private Limited. Today we are going to see the last 10-year SIP returns of large cap funds. What are large cap funds? Large cap funds are those that have at least 80% of their portfolio in large cap stocks. What are large cap stocks? Large cap stocks are those that are the top 100 companies in India that are listed in the market. Now the topmost company, as of today, the topmost company from a market capitalization perspective is Reliance Industries. The 100th company is Honeywell Automation. Reliance Industries is worth more than 13 lakh crores of rupees. Honeywell Automation is worth more than 37,000 crores of rupees. So that is the bandwidth we are seeing, from 37,000 crores to 13 lakh 20,000 crores. That is the size of companies which are in large cap funds. Okay, why should one invest in large cap funds? Large cap funds give stability to the portfolio. These companies are very stable, they have very good management bandwidth, they can withstand any failures, they are very cash rich, and the failure rate is less. What are the disadvantages? These large cap companies are like an elephant. They will move slowly, their growth rate will be slow. In the sense, they will not be as high as a mid cap company or a small cap company. Similarly, large cap funds return will also be lesser than small cap funds or mid cap funds. That is the demerit, if at all I can say. What is the risk level of these funds? Large cap funds, among the 100% equity funds, large cap funds has the lowest risk. Higher than this, mid cap funds have the risk. More than mid cap funds, small cap funds have the risk. And then flexi cap, multi cap, large and mid cap, all these things come in between. More than small cap funds comes thematic funds or international funds, the risk level I am talking about. How about the taxation? These large cap funds are also equity mutual fund. So in equity mutual funds, the long-term capital gains tax is 10%. If a person holds the fund for more than a year, he is entitled to get long-term capital gains. And for the first 1 lakh of profit per person per year, it is tax-free. Over and above 1 lakh, it is 10% taxable. Before getting into the details, let us see the performance of these funds, SIP performance of these funds in the last 10 years. The table is in front of you. There were 57 funds in existence 10 years ago. I have put all the 57 funds in front of you. You can view them. The topmost fund is Quant Focused Fund. So Quant Focused Fund has given a year-on-year return of 19% per annum. Mind it, this is SIP return. So a person who has put in 10,000 rupees per month in the last 10 years, that money is worth right now 29,65,058 rupees. He might have invested 12 lakh rupees, 10,000 into 120 months, 12 lakh rupees. So his profit is right now 17,65,058 rupees. Similarly, the second fund is Mirae Asset Large Cap Fund. It has provided a return of 17.05% year on year, and it is worth right now 26,93,773 rupees. If I deduct the cost of investment of rupees 12 lakhs, the profit alone is approximately 15 lakh, to be exact 14,93,773 rupees. Then next comes Axis Blue Chip Fund, Canara Robeco Blue Chip Equity Fund, Nippon India ETF Junior Bs, SBI Blue Chip Fund, and so on. The 57th fund, as you can see from the table, is Taurus Large Cap Equity Fund. It has given a return of 10.16%, and the SIP investment is worth right now 19,27,000 rupees, 19,27,223 rupees. The profit alone is 7,27,223 rupees. What you can see here is none of them lost money. None of the funds lost money in the last 10 years. Some fund has given 19%, some fund has given 10%. So what is the average? If I had invested in any one of these funds, what would have the chances that I might have gotten an average return? So the average return is 13.76%. I'm averaging all the 57 funds. And the average value would have been 22,99,128 rupees, approximately 23 lakh rupees. So the profit is approximately 11 lakh rupees. So when you compare this with PF, PPF, fixed deposit, bonds, gold, real estate, any of the investments, this has been a wonderful journey. And 13.76% on an average is a wonderful return, I would say, taking into account all the hardships that the Indian economy has gone through in the last 10 years. Probably the future 10 years might be still better. That's what my hope is. But if you are a person who is looking for guaranteed return year after year, then please do not invest in this fund, in this category, or any of the equity mutual funds. If you are a person who wants to have guaranteed return, you are better off with RBI bonds, you are better off with PPF, Public Provident Fund. So those kind of instruments come with sovereign guarantee and guaranteed return. Of course, they carry higher taxation. You have to pay tax on your tax bracket. So these are funds for those people, these are investments for those people who can take some risk, some kind of risk in their investment, and who will not be worried about the ups and downs. These ups and downs will be similar to real estate, similar to gold. So if you are comfortable with the real estate investment, if you are comfortable with gold investment, then you should be comfortable with large cap fund investment as well. Anyway, if you are interested in starting an SIP in a large cap fund, please call us at the numbers given at the end of this presentation. We would be glad to help you. See you in another video, another time. Till then, goodbye.